Good morning, everybody, and welcome to the Australian Market Preview for Thursday, 3 November. My name is Carl Kapalingua. I'm the market analyst over here at Think Markets. It is a pleasure to be with you on what should be a very interesting Thursday's trading on the markets. We'll talk about why after we talk about the Think Markets Difference, which is substantial $8 flat rate trades, your own holder identification number, and unlimited phone support. They're three very good reasons why you should choose us before your next ASX share trade. Okay, the agenda for today is to have a look at the key market moves from around the world overnight and talk about what might happen today. We'll have a look at some charts, check out which companies are going ex-dividend and what the brokers have been saying. We'll close out by looking at some of the big macroeconomic data news from overnight. Okay, kicking off with market moves from yesterday. Probably not a lot to report on here, is it? So pretty quiet. When you have a 0.3% move on the market and most sectors are up or down less than 1%, it's a pretty quiet day, but we'll take a quiet day given the strong gains we saw through November. And that's a good thing. Gold up 0.9%. Obviously, gold prices spiking on the back of the weaker US dollar, and materials sector up 1.16% as we've seen some nice moves higher in metals prices. Nikkei, pretty flat. Shanghai, pretty flat as well. I mean, 0.07%. Hang Seng managed a massive 0.13% there. And it was reflected in the US, wasn't it? 0.2% on the Dow, 0.05% down on the NASDAQ. And it's again, consistent with this consolidation, softly approach, which is not a bad thing for markets. FTSE had a pretty good day. They were up 1%. Actually, that chart is worth looking at when we maybe get to think technical this afternoon. We might have a look at that one. Okay, metals, a small pullback. Obviously, yesterday's moves in material stocks keying off the prior day's gains. That steel rebar is curious for me. My data provider saying plus 12.3%. I can't find any other data to suggest otherwise, so I'll have to go with it. But that looks like an extraordinary rally in steel for one day. Look, let me continue to check up on that one. Iron ore, though, that one I'm quite sure about. 1% gain there, both in China and in the US dollar price, and gold also doing pretty well in the last 24 hours, should continue to support our local gold sector. Okay, crude bouncing back up 0.8%. The Aussie dollar perhaps is the biggest story out of everything we've seen here. We've seen some very, very small moves. That's a big move for a currency, up 0.6% in the last few hours. It is actually breaking to its highest level since August 2018. That's important as well. And the good thing about that is that the Australian dollar is considered to be the risk-on currency. It's the go-to currency if you want to take risk. You know, we've got that huge exposure to China. We've got huge exposure to global growth. And when things are looking better in terms of the global economy, you head into Australian dollars. And obviously the euro has done very, very well against the US dollar as well. And that is continuing this theme of US dollar weakness. But the Aussie would be a close number two, I would suggest. We saw iron ore prices going up. That's helping as well, etc., etc. Okay, bond yields edging higher. They are starting to look a little bit uncomfortable there at about 0.936 on the 10 years. I will be watching that because that could certainly undermine what we're seeing on the screen, which is a pretty solid bull market in equities. The S&P 500, we talked about the poor price action yesterday, disturbing price action that wasn't consistent with a chart that looks that good. Last night, I'm feeling, well, based upon last night's price action, I'm feeling a little bit more comfortable today. We did see a close near those highs. We did see it hold at that 36.46/43 level. That's encouraging as well, because we do want to see where there was previous supply, where there was previous resistance. We want to see demand going forward. We want to see that transition. And I think we got it in a very small way last night. So encouraging, certainly feeling better today than I was yesterday, but still very much cautious and on watch. As with yesterday's update, I mentioned, look, the NASDAQ's doing better. We're seeing better candles on the NASDAQ, and we saw it again last night. So we saw that nice long lower tail. So this bit of the candle, I know I keep calling them candles, it's force of habit, and they're bars on screen. But imagine they're candles. It's not hard to paint that picture in your mind if you're turning bars into candles. But we call that a long lower tail. That indicates demand in the system. It's the demand we want to see, and the high close is also quite constructive. I'll just say what I'm about to say for the NASDAQ, but then copy and paste for the S&P 500. Very well-established short-term uptrend, very well-established long-term uptrend. There's nothing sinister in the charts to suggest that this uptrend cannot continue in the short term at least. A nice uptrend on the S&P ASX 200 share price index futures overnight. Again, we're looking for the shape, and it's good to see that the shape is bottom left, top right, and we're looking for a high close, and it wasn't that far off. It could have been a little bit better, but still pretty encouraging. So happy to expect that we would fulfill this prediction of a 0.3% gain on the futures for the cash today. Having a look at the cash market, so the XJO, pretty quiet session yesterday, as we mentioned before, but constructive in terms of potentially today hammering out this trough here. So if we can make a higher high through here, and this is a hypothetical bar, of course, but it would confirm this as a trough. The troughs continue to rise up the screen, as do the peaks. So that is a price action uptrend as well. And it's all looking very strong. I like the angle of attack. I like the support coming in through here. I like the fact that it may even be today, based upon today's close, we get this transition to a long-term uptrend as well. And we're looking pretty good to break through 67.14 and continue our move higher. Don't forget there's a little pressure point here at 68.97 and then all clear into 71.97. And seasonally, if everything goes as it could/should, it could be Jan-Feb. Seasonally, we see a high in those months. Could get there. You never know. Okay, let's have a look at some of the dividends. The ones with a zero, they're the ones going ex-dividend today. Technology 1, Fisher & Paykel Healthcare, and then you can press pause and have a look at the ones for the rest of the week. Broker moves, a couple of interesting ones overnight. Credit Suisse has come out and they've updated their expectations and price targets for big miners, so BHP and Rio. They increased their target price for BHP from $39 to $40, but also increased it in the Great British Pound price as well, so on the London Stock Exchange. And you can see the Rio Tinto one here going from 5,000. That's not dollars, it's just a default setting, so ignore that. But it does say here that's their target in pence. Okay, Citigroup raising nickel mines on this commodity theme. This is my favourite nickel stock, possibly even my favourite commodity stock, full stop, on the market at the moment. And they've gone from 130 to 140. I know the stock at the moment is about 104 or thereabouts, so plenty of upside left in that. Citigroup have a buy on the stock as well, not shown on screen, but they are looking at the Angel project in Indonesia. And we had an announcement there from the company that they were doing a capital raising to allow this 30% acquisition of that project, and well received by Citigroup. And this is the bit I like here. They're expecting the company to be a top 10 nickel producer by 2023. Citigroup also raising the target on Cube Holdings from 340 to 350 and retaining their buy rating, a small tweak there. Okay, let's have a look at some of the key macroeconomic data for the last 24 hours. The Australian Bureau of Statistics announced that Australian gross domestic product, or GDP, really it's a measure of Australian economic growth, rose by 3.3% in the September quarter, backing out the 7% decline from the June quarter, and that June quarter, of course, being the second quarter of contraction, of negative growth. That's a technical recession, the first recession we've had since 1991. Good to see some green back on the screen there. Of course, we are still, and I'm going to check my notes here, 3.8% behind net for the first 3 quarters of the year. So plenty of ground to make up, but nonetheless, a positive results. Household spending drove the economic recovery. That was up 7.9% due to increased spending on both goods and services. Services spending up 9.8% as economies reopened. Spending on hotels, cafes, restaurants, health, recreation, and the easing of restrictions also increased demand spending by 5.2%. The drawback was trade. So we saw exports fall on the back of, slower demand for commodities and slower growth external to Australia, and as our demand for external products and services grew because, Australia, less impact from COVID, we continue to spend through that crisis. But overall, good news for Australian growth there. Not so good news for the US economy on their employment growth, and this is a precursor to the official data coming out on Friday for non-farm payroll. So this comes from a company called ADP, and they do a private sector, non-farm private sector payroll survey. And we saw about 307,000 jobs created for the month of November. That was down from the 403,000 created in October and well below market expectations. There you can see for about 410,000. Big business was the key negative there. They have significantly slowed down their hiring, and the slack was picked up somewhat by small business. So we will wait with bated breath to see the non-farm payrolls coming out on Friday, our time. And just have a look at the data coming out for the rest of the week. Pretty quiet day-to-day AIG construction index and trade balance locally, and then looking tonight to weekly unemployment claims and the Institute of Supply Management Services PMI. And you can see the non-farm payrolls down the bottom of the screen. Okay, you can catch all of our updates and more in the market news section of our website. You can follow me or Think Markets using our handles on Twitter. We've got a couple of events coming up next week for you to look at. You need to get onto the webinar section of the site and register for those. And of course, the disclaimer before I leave you says that everything we've talked about this morning is general advice. We do have some products that could see you lose more than you deposit. And as an Australian regulated broker, we need to make sure you're completely aware of all of these things. So, read the disclaimer, give us a call, consult the website for further details. Okay, thanks for joining me. All the best for your trading until we catch up again. Bye-bye for now.